Okay, hey everybody, this is Brett. I want to do an update on Bitcoin and crypto. It's been a couple weeks. I've been on a workcation, including hanging out down in San Juan with Michael Turpin, Brock Pierce, and some other blockchain OGs. So back in the saddle here, we're going to talk about Bitcoin, the overall markets, what's going on. Are we going higher? Are we going lower? I think we're going lower. I'm going to show you why and how far down. So let's go ahead and dive in. So in this chart of Bitcoin, we of course can see our order block detectors. These are where we have visualized the concentration of buyers and sellers. This is why I was selling Bitcoin between 113 and 120,000 and advised our members to sell at 124,000 because of all these sellers that we saw lined up here and on the total market cap. So that turned out to be a great exit. And of course, on this bounce here, more sellers. We can see, there's an old saying, they asked the bank robbers, I think it was Bonnie and Clyde, they said, why do you rob banks? And they said, because that's where the money is. So the question is, where is the money now? We can see the buyers accumulating down here in this 49K to about 54K region, the sweet spot right around 5150 or 51,500, anywhere between 49K and 52 or 54,000, I think is a great place to start reaccumulating. And even if we go down below, we have 46K, some more buyers there, but the measured move on this bear flag here pointing toward this kind of low 49K area certainly would be in line with other targets and timelines. We'll look at that here in the next chart. So maybe I'll come back and look at some of the signals here. And we have a bit of a bear flag forming. It's kind of a sideways one. This bear flag did play out. The measured move on that came down right to that 60K level. I had been talking about if we lost that 74K region up there, we'd see that dip to 60K, which we did. I think we'll probably revisit that. Let's go ahead and take a look at some other charts here in the time frame of the bear market top to bottom. Generally, these are about 14 to 13 months. And I'm going to make the case here why I think they're shortening, and we could see that probably it's a little early this cycle. September would be 12 months. Specifically, we're looking at these red boxes here from the peak to the bottom of the bear market. It was 14 months back in the 2014 cycle. Finding support here on this blue line, which of course is the 50 SMA on a monthly time frame, which is essentially the 200 weekly SMA. 4 weeks and a month. There you go. Some easy math. The last cycle here we had from the top to the bottom of 13 months or just under 400 days. That's this red zone there. And therefore, in the last cycle, 13 months from the high to the low. So question is, how long do we go? I'm speculating because we hit the halving, or we hit the high, the new all-time high before the halving this last cycle, that the musical chairs are fully in play and the institutions are going to front run things a little bit earlier. So that's why I'm speculating. Maybe we'll see the lows here by September of 2026. The lows are largely in, I would say, if we zoom out, when in doubt, zoom out and come down to that blue line again, that 50-month SMA, or similar to the 50 or the 200-week SMA, coming down right around that 58K level. I think a throw under down to the 50K region. We're going to see some confluence there on the other charts that I'm going to share. And these are independent studies that I've done and are also over on TradingView. If you'd like to Google and just put Brett Fogel TradingView, you can see these other studies, several of which have been rewarded with editors' picks recently. So you can go check those out over there on TradingView. And if you want to keep in touch there and follow along. But yeah, so basically we're talking about this coming down in this range, finding support, probably a throw under, which we saw last cycle, below that 50-month SMA. And a capitulation sell-off, kind of, getting retail, everybody out of the markets and then pushing higher. But time-wise, probably not going to happen. Not going to see a lot of upside, permanent upside, until later in this cycle here, as we can see. So with that in mind, let's go ahead and jump forward a bit. This is a monthly cycle here. I've drawn a bars pattern on a previous move, kind of suggesting that, maybe the bottom is largely in, but I think probably we'll see a deeper drop. And in this chart, we have the This is the EMA of the, I guess this is the 50 EMA, 100 EMA on a monthly time frame. Also has been strong support throughout here, and last cycle was the bottom. Specifically, what I'm looking for to go all the way back in and back up the truck, as they say, is when the monthly early reversal indicator, this is one of our proprietary signals, this green arrow, the actual oscillator has a Keltner channel built in. It was an accidental discovery. I believe that it's showing institutional programmatic buying and selling because it's only triggered 4 times, and some of these have been in back testing, but at each time, the only 4 times it's triggered at the bear market bottoms, and we saw that here, and we saw that here, and we saw that, of course, in January of 23, where we were saying to get back fully in the market. So I'll be looking for that, for giving the green call to get back in. But again, I think it probably comes back down to this level, 48K, 49K, 50K, where the buyers are. So that being said, here's another study showing the different levels over time. You know, we see these 4 different simple moving averages. We have the 50-week, which is in green. That can give short-term support there. And we break below that, that can be sort of quicksand and continue lower. We're usually to the 100-day, which is the one in red. I'll zoom in on that a little bit. The 100-week SMA there also support. When we break that, generally then we're looking down to head down to the 200 and 300-week SMA. And so we've seen that purple line, which is the 200-week SMA, largely has been support over the last several cycles. And so we saw that all through here. A bit of a throw under on the back here down to the 300-week back in 2015. And then the last cycle, 2019, held pretty well here. The COVID crash went all the way down to the 300-week. So these are important, simple moving averages on the weekly time frame, and have been historically very strong support. And of course, I've layered in our buy limit orders, the concentration of buy orders. You know, in this case, down to 28K. I don't think we go down that low. Some are saying 30K. I really think it's going to be 50K where we're going to hold. And then we can see the sellers are still lined up here around 74K and all the way up to 122K. So that's what that means. But in terms of zooming in and the buyer support, look, if the 200 and 300 week have historically held, I think we do come down around the 60K level to retest that support level, and then some kind of a capitulation that scares the market. You know, we have this Middle East conflict that has to resolve, and also they haven't fully passed the Clarity Act and the Market Structure Bill, so anything could happen. A nice capitulation sell-off down to around 52K, maybe a little bit below that. Again, that's where the buyers are, so I'm really looking for the re-entry zone here on Bitcoin, anywhere between 48K up to about 55K. And those will be the sweet spots for the reasons shown here. So anyway, you can find that study over on TradingView, as I signaled and showed a minute ago. This is the ISM Purchasing Managers Index. This historically has shown and overlaid with the market cycle highs. This last cycle did not get up in the high levels. I think this shows that the cycle is just deferred. I think it's delayed. And down below we have U.S. net liquidity plus M2 over U.S. debt. Now, this has been below 76 for some time now, and really needs to get back above that for liquidity to return to the markets and see these markets take off. That's really what drove the 2021 market, was the money printing and the liquidity coming back in to stimulate the economy. But we can see here that over the last cycles, Bitcoin tops here, and the timing wise, according to also the ISM, we can see that this rising trend line, we really should have seen much higher prices, and we didn't. We were down below 50 on the ISM, which was a red flag for several months. Finally back above that. This shows, we certainly could see this. And I think the next cycle we'll see that push up in these much higher levels, but timing wise, it could push out quite a while. We have to see how that plays out in terms of timing. On the USDT dominance, this is a look at stablecoin dominance. We've covered this in the past, and this fractal here, I've added a new fractal here, which I'll cover, but this fractal here was from the prior cycle, and largely it's been playing out. Again, this is inversely related. So when money flows into stablecoins, in this case Tether, USDT, And when money flows into Tether, money's flowing out of the markets, and that's when we have these crypto crashes and bear markets. So we dipped up into this briefly. We're pulling back a bit to this median point. I think we probably do push up higher again as Bitcoin comes down to that 50K region, maybe a little lower. And then what happens? Where we firmly have been in crypto crash and crypto correction zone and are in the bear market. But what happens next is this fractal from the last cycle. Now, these don't obviously have to overlay exactly, but it's a good sort of guideline. And so if we were to see this sort of thing play out, and then over into the next bull market, the area of interest, as pulling back here, maybe we see a bear market rally off of the 50K region, maybe up and retest the 75K, 100K region, and then we get another reversal into the summer there, and then another push up firmly into the bear market for a double top. We saw that last time, and then that's what we really want to be watching if we get that, because as we leave that zone, money flowing out of stable coins, this yellow line is kind of reversion to the mean. Then we see that money flowing back into Bitcoin, back into Ethereum, back into the total market cap, and then back to bull market highs. But again, this sort of signals back in the 2028. So have to see, but a useful marker just the same. Here are those studies that I mentioned. Let's go back, however, to the daily chart. I'll look at the 1 hour, 4 hour briefly, just showing the Bitcoin's stuck and it's sandwiched between buyers and sellers. There's no conviction in the market. There's no catalyst really to move this market right now. Until and unless the conflict in the Middle East straightens out. We have oil well over $100. Straits of Hormuz are closed. Not to get into all of it, but political unrest and uncertainty does weigh heavily on the markets. They don't like uncertainty. So I do believe we're headed lower on Bitcoin down to these regions, and certainly that will carry the rest of the markets down. We can see that in the total market cap as well. And once again, our sell order blocks we saw in here, huge sell orders up across the board in the total market cap. Another reason I was signaling and telling people to get out of the markets up here over $120,000 Bitcoin, because this did seem to be playing out. We had a bear flag that is played out, the measured move, not yet played out fully on this larger macro bear flag, the measured move down into this region, which would coincide with that 50K Bitcoin in that range. And then we had this little smaller bear flag forming and similarly targeting this range down in here. So I think that's highly likely that that's what we see. There are a couple of coins looking interesting here, but you don't want to fight the overall markets. Things like ETH and SOL are headed lower as well. And so I would be very, very careful in buying these. Hyperliquid has been showing strength in a nice macro uptrend there. So this is one that I think in this range, this parallel channel worth accumulating slowly, but being careful of the overall market. Algorand showing some strength, but this is a bit of a dead cat bounce, and all the sell pressure above, I would not be jumping into that. But looking at Solana and ETH here, just not looking good. I think Solana pushes down to the $50 range. We can see buyers there on the weekly time frame. After pushing up to $300 briefly and a failed cup and handle breakout. But I think Solana between $40 and $50, nice place to accumulate and reaccumulate Solana. I think would be a good marker. Similarly, Ethereum down around 1,500, actually 1,400 to 1,500 ideal, but it really still could go down to 1,000. It could come back down on this range if you can get Ethereum at 1,000. That would be a great target. And incidentally, I was going to share a quick photo from my trip down. I was in San Juan at Tokenize, a great event, and met some great people there. The picture that I'm going to share is with a guy that he said, I said, are you in crypto and how long? And he said, well, I met this guy 4, 5, 6, 7 years ago. And of course, you'll recognize who this is. And I said, who recommended he get into crypto. He just done very, very well. And this leads into my one and only Vitalik Buterin joke. What do you call Vitalik Buterin leaning against the wall? Italic Buterin. All right, boom, boom. You'll get that on the way home. A couple other pictures, though, that I'll share because there were some OGs there. We have, of course, Brock Pierce and Michael Turpin. Got to see them and hang out with them a bit. Always a good time. And some other OGs there, like the guy that runs that runs the Virtuals protocol, and also Gala Games. Gala Games, by the way, is pretty much dead. He was one of the co-founders. He has shifted focus and is going in another direction. So just a heads up on that. I will update everybody on what that new project is. His name is Wright Thurston from Gala Games. But again, even though it would be a 300x on Gala to get back to the old highs, I think that is not ever happening. Unfortunately, this is a dead project. So, you can see all the sellers there. I would say stay away from that. The newer project is a decentralized version of Zoom, and it's called Rally. So you can check that out if you'd like. Chart looks somewhat interesting. I want to pull up one more picture here, and that is from Chris Johnson, the kind of head of Virtuals protocol. Where is it? I'm scrolling over on my other screen so you don't have to look at all the chat in our M3 Active Trader group. But yeah, I was sharing these pictures real time once I was down there. Yeah, of course. Here it is. So this is Chris Johnson, and of course, he is running Virtuals Protocol now. Great guy, had a lot of fun down there. So anyway, do recommend you guys go to crypto events. Great way to hang out with like-minded people. The Tokenized project, I have no affiliation with them, but they will be doing the next one around the Bitcoin conference. And there's Chris again. So anyway, he lives in South America. Apparently, instead of saying Mr., they call you Don. So the joke is everyone calls him Don Johnson. So anyway, back to the charts here. Hyperliquid we talked about. I'll go around. I wouldn't be buying anything right now. The markets are looking for a bottom. Let's take a look at from a cycles perspective, and I'll clean up a chart here, and then we'll kind of wrap things up. But from a cycles perspective, we are not really there yet, and I'll pull up our new Super AI indicator showing that we're 76% bearish here on Bitcoin. But anyway, this showing a daily, weekly lows all the way back here, but have not put in a new daily cycle low, and so really you need to see that. So I think we push down in this region, and then from there we get a bear market, counter trend rally, and then from there all bets are off. So we'll turn off the cycles indicator and we'll look at one more thing, which is our Super AI indicator, which is 71% bearish. This is all of our signals plus a VWAP, a volume spike, and so we're just rolling this out in beta. It's not available yet, but showing 71% bearish both on the daily and the weekly time frame. So I do not see any reason for this to head lower in the near term. So guys, that's all I have to share with you for now. Just a quick update. Good time to sit on the sidelines and wait for some recoveries. I do kind of like Zcash and Dashcoin, and I'm watching for these. However, a rising tide rises all boats, and a lower tide lowers all boats. So Bitcoin's sort of looking like we're going to roll over. Zcash probably looks good back in this region. That would be a 786 retracement from the fib high to low where it went 10x. So right around 180 would be a great place to re-enter Zcash for the next run. Also Dashcoin, I think this looks interesting. It has the opportunity, or has a history of doing these quick pushes higher in a matter of days, can more than double. So since we're in a big buy block, I'm watching Dashcoin and have some long futures on that. And another little known project that I'm watching that Chris Johnson tipped me off on, it's called Venice Token, created by Eric Vorhaus, a OG in the space. Nice looking chart, and it went from $1 to $8. So any breakout up here above 8 or 9 would be price discovery. But we do see a bit of a sell block up in here and profit taking. I'll be watching that carefully and adding to that position if it starts to break out. So anyway, that's all I have for you guys. We'll look forward to talking to you again soon now that I'm back. And please make sure to like this video, share it with somebody, comment down below if you'd like me to cover any specific coins. We're trying to really ramp up the channel followers. It helps get the word out. So please, thank you to go ahead and just hit that like button. You don't have to smash anything, just like that the button. Comment if you'd like me to cover any other sectors and or coins. So anyway, with that, cheers, and we'll talk to you soon. Bye.